What's up, guys? This is Carter Thomas with Coin Mastery TV. Welcome back. Happy Monday. Make sure you go and sign up for the newsletter at coinmastery.com/invest. Get lots of free tips and lots of great info to help you make better decisions and capitalize on this unbelievable financial revolution that we are in. Great few days, interesting weekend. Today we're talking a little bit about Bitcoin prices. We're going to talk about the hard fork briefly, Ethereum hard fork that happened today. Talk about one thing I put together about news cycles, which I think you guys are going to find really interesting and hopefully very helpful. And then I want to talk specifically about the coming Bitcoin gold fork and the SegWit 2X fork, which seems to be a hot topic. That's what I'm getting a majority of my messages and emails about. So I will start to unpeel that onion with you guys as best I can. Hopefully provide more data for you to decide what you want to do in that situation. All right, let's just fire this thing up. So we are looking at the Bitcoin. We're looking at 4 hour right now. And as you can see in the last few days. Today's the 16th. So I guess over the weekend, for the most part, we've had a little bit of up, a little bit of down, where the price has, I wouldn't say it's stabilized because the money isn't flowing out of Bitcoin yet, but I do think that there's some sort of hesitation in the market where there was a straight inflow of cash. Now there's a bit of a sideways movement. But that sideways movement hasn't necessarily translated back into the altcoin market, or really, it hasn't really translated anywhere, which is interesting because the volume is still there. So there's just like a lot of action still inside of Bitcoin. A lot of people are buying, a lot of people are selling just within the Bitcoin market, and that cash isn't necessarily going into altcoins. This is not a black and white statement, obviously. There's certainly some cash going back in. But that's kind of what I'm seeing right now. In terms of what's going to happen next, which is the big gorilla in the room, we'll get to some of the fork-related issues. I personally am just going to sit back and watch this thing if it goes up or if it stays sideways. I don't really care. My focus for the most part is on the altcoin market. I think that is where, if you're going to get a big gain, that's where it's going to happen. And so if Bitcoin stays sideways, that may be good news, because if we see cash coming back into altcoins, that's where my focus will be. If it goes up, so it goes. Sit back and let the Bitcoin ride for a while. All I really care about is when the next dip is. So that's all I'm really looking for. And not necessarily because of Bitcoin price movement, but because how that will translate into cash into altcoins. So remember, I think last week or 2 weeks ago, or kind of all through that whole dip area, I was talking about how I'm less concerned about Bitcoin's price movement, because if I buy, it's going to go straight into altcoins. And that's what I've been doing on these dips, is just, I don't really care about the Bitcoin price as much as I care about the relative altcoin prices. And because that was the beginning of my strategy, you have to complete that strategy. You can't shift midway through the buy-sell cycle. Or you could, but I don't have a good reason to. And so I'm watching this, but as it relates to the altcoin market right now, and as this price goes up, does it drive the prices down further? My gut is telling me that it's going to probably go up a little bit more. And the only reason why is because majority of people I've talked to, both interacted with and also just observed, are out of cash. Most people, like on the indie investor side, which I would consider this audience in that sphere, don't have any more money to deploy. So they're all waiting and hoping that altcoins start to bounce, which could easily happen. But a real market squeeze would push the price of Bitcoin higher so that the altcoins get even more depressed, to push even more people out to really make that FOMO even stronger. Whether or not that happens, I don't know. I think that also, there's a lot of dynamics in play here with the forks, which we'll talk about. But like I said, the only thing that I really care about is when does it start dropping. So when it started dropping on, was it Saturday, I think? That looked interesting, right? The altcoin market didn't really move, so it looked like a quick sell-off, kind of like a quick profit scalp. And now we're back in here. So what I'm really looking for is a sustained drop, which will bring cash back into altcoins, so I can scalp the altcoins, set up new opportunities, and then reassess where it's at. So we will see what happens. It's always an adventure with this thing. Very exciting. All right, let's hop over to quick news on the Ethereum side. And the reason I'm not really opening up B2X today is because Ethereum, like a lot of trading on a lot of these platforms, isn't very good indicator today, because there's most of the exchanges increase their confirmation levels up to like 1,000 confirmations, which is going to make things really slow. So I think tomorrow you'll see a lot of price action, but today you're seeing things come and go, right? You're seeing things like Stellar Lumen and Ripple, mostly just coming out on news, which we'll talk about in a second. But overall, until this thing really starts to, until Bitcoin really starts to diversify its cash, the altcoin market, in my opinion, is just kind of, bounces here and there. No big stories to talk about. The Ethereum hard fork, it looks like, as of now, that it has gone through relatively smoothly. The code has been deployed, and this is the third of 4 major releases. So there's going to be at least one more coming out in the next couple weeks, and that will kind of complete the whole Ethereum fork. So what this is going to matter to you is, I think the Ethereum price will respond accordingly to how well that this fork goes through. Right now, it looks like it's going through very well. And Ethereum is the preferred tech platform for a majority of businesses out there. So when you look at all the institutional and corporate companies that want to get into crypto as a platform to build on, not necessarily as an investment, but just how to rebuild things, Ethereum is really what they're looking at. And as this fork unrolls, it makes the code not only stronger, it also includes new privacy features, which is a big deal to a lot of these companies. So that's why, if this hard fork goes through accordingly, it's different than the Bitcoin hard fork, because instead of splitting it into which has a full financial focus for the most part. I mean, there's obviously code and mining implications on forks, but the conversations are all about money for the most part on the forks. With Ethereum, the conversations are all about making it more solid for development, make it better for people to build on. At least that's what the narrative is that most people, or I should say that the developers, are taking along this. So this looks interesting. I own plenty of Ethereum. I think it's going to be an amazing tech. I think it is an amazing tech, but I'm not positive that it's going to have the same price horizon as the more store value, proof of work, mined type coins. That's just something that's kind of like a longer term thesis. But I do think that this is really good news for Ethereum. I think it's really good news for people adopting blockchain. And I think that there's going to be a lot of new interesting opportunities that come from this. So fingers crossed that this keeps going smoothly, and we'll keep you up to date. Now, this is something I wanted to show you guys. This is a fun, loose little chart that I put together this morning. And as it relates to yesterday on Twitter, I posted about Ripple. And I posted, I have been emailing and talking to friends in the finance industry and asking them, why would they use Ripple? Why wouldn't they just build themselves? And I posted that question. You guys had a lot of great responses. And it really got me thinking about the future of how fundamental analysis is done, and also how you guys can start thinking like hedge funds. I've never worked at a hedge fund. I have friends who worked at hedge fund, have worked and continue to work at hedge funds. And this is an interesting way to think about the next, let's say, 6 to 12 months. If you're listening on the podcast, I would definitely encourage you to go watch the video at some point and see this graph. The y-axis is the price, right? Y is vertical, right? And X is time. So what it's saying is, as crypto, the overall market cap, which is this green arrow, it's going low left, up right. It's just a straight line. As crypto market cap goes up, the price goes up. As time goes on, it's going to continue to grow. This is obviously not the scale. It should be much more exponential in this, but you get the picture, right? The longer crypto goes, theoretically, the higher the price goes, and more importantly, the more competitive it gets. Right? It's just like any capital market. The more money there is to make, the more competitive it gets. Now, this red arc here, which for anybody listening, starts down on the bottom left, and then it goes up, and then it starts to bend up vertically exponentially. So it gets steeper and steeper, like you would imagine an exponential curve to look. This is not measured by price. This is measured by difficulty. And what this curve represents is information that we all get. And what it represents is how hard it is to get really good and really accurate information that translates into profitable price changes. And what this curve is saying is that early on in crypto, as the market was smaller and much less competitive, the information that you could get off of social networks, off of news sites, off of anywhere, actually would lead to the ability to go make trading decisions and buying decisions. And to a certain extent, that's true now, where certain posts that go viral or certain posts that have a lot of verified information, that can move a market price, at least in the short term. But what this curve is telling you, and this is very oversimplified, as you can imagine, but as the market is going to get more competitive, as it already is getting more competitive, the ability to get really good information gets increasingly difficult. And the important caveat is this: it's never going to be hard to get information. It's going to be hard to get very good verified information that nobody else has. And that is the name of the game. That's what the hedge in hedge funds are. I mean, some hedge funds do quant and they have algorithmic and all that, but for the most part, hedges is better information. That's why you will see funds, they spend weeks, months, sometimes years on due diligence, getting better information, in various ways that guarantees that the trade is going to be the right one. And so what I would encourage everybody to think about, and this plays into the Ripple conversation, is as you guys are getting information, and as I get information, this is what I do too. How can you validate? How can you guarantee that it's legit, right? It's not just some story that somebody told you that makes sense. It's, oh yeah, I believe that. That of course that makes sense. And how effective will it be in terms of moving the price, right? Is this something that nobody else knows that will have an impact? Meaning, if you knew somebody was going to go drop $300 million into Bitcoin this week, if you had that information and nobody else knew that was going to happen, you could go take action on that, and the chances of it happening are very, very high. And that's how you win in competitive markets. That's how your odds of making the right decisions go way up. And you're going to see a majority of people not doing this. A majority of people are just going to keep sharing information, and fake news is going to continue to proliferate. And it's just going to go faster and faster. There's going to be more and more of it. And if you don't have some filter or constantly asking, like, hey, can you prove that? Hey, where'd you get that source? Can you verify that? How do you know that's true? And if you're not also getting information that nobody else has, it's going to be harder and harder to make decisions on that. Technical trading is different because the charts are the charts, and you just got to get better at the skills. But there's also way more people to compete with who are also looking at the same charts. And so that's why I think that this is really is a really important concept to keep harping on. Is that as we get information, you will always want to make sure that it's verified, that it's true, and that you're not the last to get it, or you're not the fifth to get it. You want to be the first to get it. And the question of where do you get that information, that's a bigger conversation, right? I mean, that's like, you got to meet more people, talk to more people, offer more value, and the information tends to come your way. Speaking of which, along the lines of Ripple, that the question I had was, why don't banks just do this themselves? And then this morning, there was an article about how JP Morgan, which is pretty ironic with Jamie Dimon, they're launching their own interbank payment platform, which is similar to what Ripple is doing. Now, whether or not this is going to work out, I don't know. It's kind of hilarious that they launched this right in the middle of Ripple's huge conference. Was it Swift or whatever the big conference is right now. And this is like, they've been working on this for a long time. This is not some new thing. They just happen to release it at the exact time that Ripple is trying to make a big push. So this was not some coincidence. They're obviously trying to make something a big deal about this. This is the kind of information that is valuable to get, not from CoinDesk, but how do you get this before it hits CoinDesk? And that's not an easy question. I'm not saying that there is a blueprint. If there was, everybody would go do it. But those are the kind of questions that if you really want to win, if you really want to make it happen, this is the kind of stuff, right? Like knowing that this is coming out, would you still buy Ripple or not? Maybe you would, maybe you wouldn't, like whatever it may be. But I thought that this is interesting. This is that there's always something going on in the background, whether we see it or not, whether we believe it or not. That's the other big thing. Now, let's finish this off by talking about two things. First is Bitcoin Gold. Here's a good article. I'll link to this. This is in Bitcoin Magazine, all about Bitcoin Gold and also the SegWit 2X forks. In my opinion, I don't think Bitcoin Gold is going to be that big of a deal. The more I see this, the more I'm looking at the Bitcoin chart. For anyone listening, I don't think that Bitcoin Gold is really the big driver behind this. What I think that this is what's happening here is obviously the altcoin sell-off into Bitcoin, but the driver of that is the Bitcoin 2, like the SegWit 2X futures market, which I'll talk about in a second. So when it comes to these forks, I think that what you're going to start to see is that the price of these forks is going to start to become more clear before the actual fork happens, and so you're going to see the price action happening before it. Meaning, I think that this is already pricing in Bitcoin Gold. I think Bitcoin prices is already starting to price that in before October 25th, or whenever the Bitcoin Gold goes live. And you also won't see as big of a sell-off after it as maybe you might see right before it, because it's already been priced in and people know that there's no reason to keep it or whatever it may be. I know that's a bit of speculation, and obviously this is just my opinion, but the more I learn about these forks, the more I'm seeing companies like Bitfinex capitalizing on that inherent demand for certainty. They want to give people the opportunity to get in on that price action before it actually starts, which inevitably gets baked into the overall Bitcoin price. So I don't know. The more I talk to people, this is what I think. The other thing is when you look at the SegWit, so if you go to coin.dance and you can look at the blocks, what this does is this shows you the full like all the different blocks on what's getting mined on Bitcoin at any given moment. And it's not real time. There's a little bit of a delay here, but you can see on the Bitcoin side, SegWit2x is starting to lower in both its support and the mined blocks. So this is a very good indicator of whether or not SegWit2x is going to succeed. It's also a very good indicator of what the potential price would be. Now you've got some guys like Roger Ver and some of the big block proponents that want SegWit2x to go through, and they're willing to put huge bets on it. But at the end of the day, the only thing that matters is what the miners decide to do in terms of whether or not it gains any traction. And there's a whole dynamic within that. But this is a really good way to illustrate what do people actually do versus what do they say they're going to do. That's why charts are so powerful, is because who cares what the news is? Who cares what people talk about? Who cares what the rumors? The volume, the price, the charts themselves, that is the illustration of all of that in one thing. And this is a similar situation. So you can see that the 2x is starting to lose a bit of support and all that sort of thing. So we will see. We will see what kind of price action or what this leads to. But you can also go over to Bitfinex, and I'm looking on CryptoWatch. This is where you can see it, because if you don't have a Bitfinex account, it's hard to see this data. But on CryptoWatch, what just happened? You can see these are just the futures. This is not the actual market. So you have to have a Bitfinex account. You have to redeem your SegWit2x BT2 tokens, which in itself is a whole potentially weird thing that they're doing, but whatever, that's a different conspiracy theory. And you can see the price going up and coming back down. And this is a very good indicator of what the price will be when the open market hits. It's a glimmer into it. It's not a perfect indicator because this is not a perfect market. But my personal opinion is that by having this already done, you can really start to make a case for Bitcoin's price, knowing that let's say this was the price on November 5th or whenever SegWit2x is supposed to go, supposed to hard fork. If this was the price, if it was 0.14001 price, you could make a case that much value is what this big spike was if this all happened tomorrow. You see what I'm saying? Like this fork generated that much potential revenue for people, so they would buy up that much more Bitcoin, so that when they received it, the price going back down, it would even out to the true price of what BTC would be. Now, obviously, that's not an exact science, but that's how futures markets tend to work when you are, at least in this situation, with some sort of fork where it's kind of splitting off of the original. So I think that this is going to be really interesting to watch. I'm definitely going to be watching this. I don't use Bitfinex, so I can't get in there and see the inner workings of this. But this is all you really need to know. You can also go to bitfinex.com/stats, and you can see the overall, the price action, the different price it's trading at, the historical value. You can see the volume. You can see the order books if you want to see the order books. All of this is interesting. Now, the key thing here is that this wasn't available with Bitcoin Cash. So when you look back at Bitcoin Cash, it actually spiked pretty big early on, and then it had a big dump, and then it came back and had a spike, and now it's dumping again. It begs the question, what would that have looked like if it had a futures market already established? And not even a futures market. Like, this is almost like a credit for getting your SegWit2x already. So it's almost like a pre-market, if that makes sense, which is why it's a little bit unique. And because of the way that works, I don't know. I think that might be getting priced in already into Bitcoin's price, so that we may see a drop before the forks, which would be very counterintuitive for people who think that they want to get the Bitcoin price up to get the extra forks. Depending on what these prices do and how things play out, it may be more profitable for big money to push the price down before the forks to see what happens. So interesting times we live in. I think the only thing I'm really worried about right now, or not worried, but the thing I'm looking at, Bitcoin price, I'm waiting for it to drop in a significant way, because once it starts dropping and there's enough of a confirmation, you can start to look at what the retracements look like, because then that trend will be confirmed in many ways. And once you see that, you can start to look for the 50% retracement line, the 68%, all the Fibonacci stuff. But until then, I'm just letting it go. We'll see what happens and rock and roll. So hope that was helpful. A lot of good stuff today. Just keeping an eye on Bitcoin. Remember, always verify your information. It's just going to get more competitive. This is really I think that this is going to be an increasingly big piece of who wins and who doesn't. The good news is if you do get good information, it becomes even more valuable, because in competitive markets, great information that's ascertained in an ethical and legal way is amazing to get. So thanks all for watching. I will catch you tomorrow. Peace out.